Hey everyone, Todd of 51% Crew again. Welcome to another video of technical analysis education. Today's topic will be RSI, also known as Relative Strength Index. You say, Todd, what is RSI? It's the Relative Strength Index of a market, and it's calculated over 14 periods, and it ranges from 0 to 100. You say, that's great, but how can I use this in my trading? Well, let's get to that. Basically, the indicator is found up here. If you don't know what it is, indicator, RSI, Relative Strength Index. And we use this to find overbought and oversold conditions in the market. When this indicator is above 70, it is considered overbought, and below 30 is oversold. The thing with this is, I've noticed over the years, is this was designed for slower moving markets such as the stock market, Forex, and things like that. So in crypto, I'm a big believer in we have to adapt things because we're using tools and indicators that are from other markets. And crypto is such a violent, fast-paced market that we kind of have to adapt, like I said. So I kind of don't consider a market really overbought until 80. But I do consider a market oversold at 30, 25 to 30, just from looking at this over the years. So I kind of adapted my style to see what fits me and how this indicator helps me. So what RSI is doing is they're taking the total gains and total losses for that period and they're dividing it by 14. Why 14? That is your default indicator found down here. It's a 14 period average, which means 14 days. So you take the total gains, total losses, and divide it by 14. But that's kind of irrelevant how they get that because it's to calculate it for you. So don't worry about that if that's a little bit confusing. You don't have to know the exact math behind it, but I want to show you how to use this and examples in everyday life for the conditions of the market, how you can use this and keep it very simple in your technical analysis, but gain a lot of data. So let's jump in here and look at this. I already spoke about conditions over 70, which I prefer more to use 80 for overbought conditions. Because if you look here, look how these markets. Let's go to 80. How many times does this hit 80? You see how this is hitting over 80 when really overbought conditions, not 70. And this is on a daily chart, so that's a pretty strong indicator that these markets are overbought. And you say, Todd, how can we use this? This is cool. Yeah, it is. So something so simple here that anybody can pick up and start using within a couple of minutes, if not hours of, paying attention to this, you can start using this in your trading. So let's take a look here and delete this off of here. I wanted to sell the top at 20 grand. Everybody wants to sell the top and buy the bottom. So, that's just the thing. Like everybody wants to be the man. So let's look at it here. Does this give us an indicator here that this market is going to correct on us? When we got up here to 20,000, so let's look at this. We have a one-day chart, or one-day candle, I should say, of price action. And what happened was, right here, we peaked at 93 on a daily candle. So we're literally, we're literally 10 to 20 points overbought conditions. And this is just screaming greed in this market. So what happened was we had a correction here at 16.6 and it corrected down. So this was a good indicator that this market was starting to fail. So we need to start looking to get out of our position. We're overbought, it fell down, and it's still at 80 in this zone, 70 to 80. So we're still overbought here, and they kept pushing. So what really told us here was to start getting out of this is look at this price action here. That price action right there between this high and we reached a higher high actually. We can actually go to here. And what happened with the RSI? Wow, look at that. So we reached a higher high in price action, but a lower high on RSI. So that's telling us that this market is starting to fail. What we call this is bearish divergence, when the price is diverging over the indicator. Now, you have to keep in mind too that indicators are lagging. So that means they're falling behind. So you can't rely on this exactly to get in and out of trade, but this will give you an idea of when you need to buy and sell the market if you combine it with other indicators. So the good thing about indicators are people say, and I kind of tend to lean towards this, that an indicator will win 9 times out of 10 over price action. So keep that in mind. So this market here is still climbing, yet this RSI is telling us that this market is failing. So the best time to get out of this market, yeah, you might not get the top, but you need to start getting out of the market in these 2 days. Because remember, this is 48 hours, of price action that keeps climbing. So that even if you don't sell this top, you need to get out of this market because the price is climbing, yet we're failing on the indicator. So that's really giving us divergence here. And that's telling us that the bears are taking control. So there is one great example of you could have sold this top at 20 grand off of looking at this indicator. So what you do is you pair this with multiple indicators. You probably look at MACD and several other indicators to tell you this market's failing. And you have yourself a trade off of something so simple and so basic that any one of you I can teach this to. So let's go in here and find some other examples. We're going to look at some bearish and bullish divergence and overbought and oversold conditions. My favorite to use this on is the 4-hour. But obviously, like I said before, you can use this on any time period. Just depends what time frame you're trading in. Now, I wouldn't go freaking out on a 5-minute chart, obviously, if the market's oversold and start unloading positions. So don't get confused with that. Don't think you're getting ahead of the game here. But a lot of people were asking me how I knew the bottom was coming at that 72.40 call that I got. That pretty much was my second call in a row, or actually it was a third call because I called 3,000, 6,000, and then 72.40. Literally, I called all the bottoms. And they wonder how I did that. Obviously, it was a combination of multiple things, multiple indicators. But the one that really piqued my interest here was the bullish divergence I was seeing on the chart. That told me that yes, price could dip lower still, but this market is not as weak as it appears. And what happened was it came down here, and I knew once I seen this bullish divergence that it was coming down, but the price action wasn't as weak. So I picked my next level of support for that fib. That would have been my next support level. And what happened? It bounced right off of that. So let's take a look and show you an example of bullish divergence. So we'll go in here and let's pick the low period of the RSI and the price action. So we went from here to here, yet here to here. At the time, the indicator was really when it started getting to here. That was really screaming at me. Like this was screaming at me that this market is about to rebound. And that was the point. But obviously it started to rebound. It still got caught in the trap, which is the pressure, but man, it really sprung up here. But here's an example of your divergence of bullish divergence from these 2 points. And that right there is telling me that we got it here too. So look at this. Here, oh, sorry, here, I guess the magnet tool doesn't like me. Here to here, where are we at? Here to here. Look at this divergence. So this right here is bullish divergence telling me this market is stronger in an indicator than price action is willing to give us. Here's an example that the top. See how price is climbing? Yet indicator is slightly declining, if not, flat. And we can go here too. Look at this high. Here. Let's compare this. Indicator lost. Here is a bearish divergence. Bearish. Indicators higher. Indicators lower. So see how this gives us so much information, yet it's so simple, anybody can do it. I mean, I don't think this could be any clearer for an indicator on how to use it. So we're looking now here, and you also have to take into account when this is. Like, we're in a trading period of a weekend, but we'll probably see a slight correction soon because we're losing momentum here. So this might start to correct soon, and it'll probably come down and go back up. But just by keeping an eye on this RSI, so one indicator, this helps you understand and give you an idea of overbought, oversold conditions and where to sell the markets. So here's clearly some examples of how to use this indicator. And don't forget to keep in mind the whole time that 70 to 80, let's get a box. This might even be a good idea to do while you're learning this. You can come in here and scrunch this down a little bit. And obviously you have your lines, 70 to 80. So turn this here and put that on your chart. That way that'll give you an idea when the market starts climbing up. You say, okay, now is when I got a visual cue that I need to start looking for other indicators to start selling this market. Is it going to continue higher or is it going to correct? So you can always put things on your chart like this to give you visual indicators to help you out. Just tailor your individual chart the way you need it, and hopefully this gives you a clear explanation of what RSI is, Relative Strength Index, and how this can be used in everyday trading to base some type of educated decision off of, because after all, technical analysis is not exactly what's going on. It's no gift and it's never going to be perfect, but we're taking as much information as we can, and what are we doing? We're trying to make an educated decision. It's better than rolling the dice. Like some people say that technical analysis doesn't mean anything. So I'd rather base my decision off as much information as I can that's provided to me than just try to guess. So if you have any questions, feel free to leave them in the comments, and I will do my best that I can to answer them. Or if we have to go over this further in another video, then so be it. I just want to get you learning it. Keep it basic, keep it simple, get you trading, making educated decisions. I guess I will end this video and catch you on the next one. Thanks for watching.